Hey everyone, welcome back to Pay in Theta. Today we're going to talk about my Robinhood account. As you can see, the past month I have grown it about 30%, about 1% a day. Very, very good. I still have a little bit to go on this week. I just kind of want to go through my thought process on this and kind of how you can grow this in baby steps. You can see just baby steps, baby steps, baby steps. And it can grow a good bit in a short amount of time. So I kind of want to show this side of investing. It definitely involves a lot less money than my main style of investing, but it could definitely be a very lucrative way to get started. So, and I kind of want to start this myself just to see what I can do with it. So let's go back to basically what I've been doing. This is my watch list. What I sell, what I think is going to go up. So a put credit spread is a bullish thinking it's going to go up over the long term play, or it's not going to do anything at all. I think all these companies fit the billet. Every single one of these. This one is leveraged, so bear in mind that it goes up 3 times more than I think it's the small cap stock. So that's a little bit riskier play as it can move a lot more. And as you can see here, Tesla, I was up a pretty good about $100 on this as of yesterday afternoon. I did not get out of it in time, unfortunately, and I stuck with it through today, and it did tank. So that is unfortunate, but we did get out risk mitigation. It got out very, very, I would say, at a very acceptable loss. I know it does sound big in the grand scheme of things, and you can kind of see here, this is where I was up with Tesla. I was in the $1,500 mark, and I did drop down $100 today. So it is unfortunate. I would have been up a very, very healthy amount. At the same time, 37%. But it does happen. So that is the risk when you're trading options, especially something like Tesla. It moves a lot. And let's just kind of go into Tesla, and I will kind of talk you through my thought process. Is Tesla even on here? There it is. Okay, so Tesla 1 week ago, uh, September. Yeah, so this is exactly what happened. So it dropped off. I sold the put for 250, I think it was right here. 250, 255. So it hasn't gone down in the past 3 months, you could pretty much say. And I knew it did drop off a good bit. So my thought process is a stock that is this enraged with bulls, meaning it just wants to keep going up no matter what, drops down a really good bit of money. I think it's a good time to get in, especially to make a little bit of money because I have a feeling it's going right back up. So at the end of the day, I sold a 250, 255 put credit spread. Pretty much means if it goes below 255, I lose. I really thought it was going to stay above that. I should have got out. Like I said, I made $100 in a day off of it, and unfortunately, it opened up and it dropped down to $400 pretty much. I got out way before then. When it opened down, and pretty much right where I set my target at, right at the open, and I got out because I knew this stock can move very, very fast. Did get out, did minimize my risk. However, I just want to kind of show you my thought process on the whole trade. Microsoft is another one that I'm currently in right now. As I'm a firm believer in Microsoft. It typically goes up. As you can see this chart, it does have its downfalls, but it typically does go up. And I set it my pretty much my put at 225. As you can see, there's some support right there at the 255 mark. So actually, I set a little bit below that just be careful. So I'm going to get $102 in credit for the difference between these two is $250. So I make $50 off $250, about a 25% return on my initial investment. And I plan on keeping these until the end of the day, so I'm not going to close it. I want to realize that full $102 because I don't think that it's going to drop $11, almost $12 in 2 days. So we will hold on to those. And this is pretty much, I got this at the beginning of the week, September 1st. As you can see, it's kind of run up a little bit. But you can do this weekly on stocks like I have here. It doesn't have to be these, but these are ones that I personally believe in, and I think you're going to do well over the long haul. You can see my trade history. Next week, I don't want to get it's going to be iffy because I don't want to really get into Microsoft if it's too overextended. I have to kind of pick and choose where I want to go. I think AMD is looking very good right now. I like to sell stocks that are on this list that are down for the day. Obviously, it makes sense. This is down for the day. As you can see over the past month, over the past 3 months, it doesn't have too many down days. So whenever there is a down day, it's, in my opinion, it's a discount. It's a good time to get in and make a lot of money. So it was a down day. If it has a down week, I will definitely keep getting into this. However, I don't want to sell something overbought like Tesla or Apple. Um, I know these stocks definitely do like to go up, but sometimes it just goes up too long too fast, or too short too fast, and it does get overpriced. So you don't want to get burned in that sense. So you are fighting a little bit of battle both ways. But anyways, each week, if you can pick a stock that you think is going to go up over the long term and is at a very, very reasonable price right now, it's a very good idea to get into these puts. So I just kind of want to go over what I would do for one of this Microsoft put. Obviously, obviously it's the end of the week, so it's really not ideal to do it, especially a weekly. So this is a weekly right here. You want to sell a put. You go here. You want to find a support range. Like I said, I think 225 is very reasonable for this stock. So as you can see, here's my position right here. But if I were going to do this, I would see 225 as a solid support. And the chances of it dropping $6, about $7 in 2 days, to me is very, very small. So what you could do is you could sell this put, but you need to have collateral because you don't have $22,000 in your account. Of course, no one has that. But if you have the difference between these two, which is 250 because this is times 100, you could make $33 off of your 250 initial investment. So you would click continue. You would do one. You would do somewhere in between the two. I typically like to go a little higher just in case, it has a bad fill or it drops a little bit before you kind of want to get in. You want to review this order. And then you can see here your collateral needed. Like I said, the $250, the difference between these two, that's how much you need to get in this. Make $35, and then everything aligns correctly. You would hit submit. That would go into the system. It would process that. Like I said, I'm not going to do this because it's after hours and who knows what's going to happen. But if I were going to do this, this would be a very, very smart trade in my opinion. I don't think it's going to drop below this, but who knows? There is a 83 or 84% chance pretty much to make money on this. And this one's a 90% chance. So it is a pretty safe option. Like I said, the only way you can do this and grow this is if you make consistent returns. So there's no point in pretty much putting all your money into something super risky because you could lose a good bit of money. The difference between these two, well over $200 for $30. So you have to play it smart. You have to, chip away, baby steps, grow, make smart moves, and then continue to reinvest. And that's kind of what I've done here. I've grown this account a pretty good bit today. Like I said, got battered $100. Past week, about 8%. 1% a day. That's pretty good. I was up 16%. I mean, that was just crazy. I typically like to, if you can see here, I like to close my positions staggeredly just so I can take money off the table and realize my profits. The trades could definitely go wrong on you like it did with my Tesla. And if you continue to chip away at the stock, so I have 5 of these. I've sold 4 of them throughout my time. I sold this one for a profit of, I think it was $18 each. Sold one for 12, sold one for 9, sold 2 for 4. Pretty much puts me at, I think it's 11 or $10.50 average between 5 of them, and I'm going to hold the last one to expiration. It just kind of realizes my gains. I would have made it $90 originally if I kept all of them. And yes, I probably would have made my full 90. However, this could have went very, very wrong. And, risk management, chip away. I want to have a lot of these green. I do not want red. I want to grow this very tactically, and I want to grow this very wisely. I don't want to just put all this money in and hope it doesn't backfire, because it definitely could backfire. So as you can see, I've grown it pretty well over the last month, 20, pretty much 28%, and all time is about 12%. I went up. I sold an Apple Iron Condor, which pretty much I'm doing what I'm doing now, and then I'm selling a covered call, a bearish put spread. So basically saying the stock will stay in a range. It was earnings, wasn't a good move, so I definitely took a huge hit, a rookie mistake. But I've come back from the grave, and I've grown this. I would say, obviously 30% roughly. I've grown this a tremendous amount, and total I am up $180. So I'm going to continue to do this. Like I said, it really depends on how stock prices end this week, and I'm really not sure what I'm going to do. But if I had to keep an eye on something, I would keep an eye on AMD. So that's pretty much it. Thanks for watching, guys, and I will make a follow-up video and keep you guys in tune to how I am doing on this smaller portfolio, and definitely trying to get the growth while at the same time being very on top of my risk management. So thanks for watching, and if you liked the video, please leave a thumbs up. Thanks so much.